Good morning, everybody. It is Friday, September 2nd, 6 a.m. Central Time as I speak here. Sorry, I'm getting started just a little late this morning. Technical difficulties. December corn futures up 5 cents at 663. November soybeans up 13 and a half at 1408 and a quarter. December Chicago wheat up 12 and 3/4 at 807. December Kansas City wheat up 11 at 879. December spring wheat up 10 and a quarter at 896 and 3/4. If you guys are listening on the podcast, appreciate it as always. Make sure you leave me a review on that Apple app if you wouldn't mind. If you're watching on YouTube, guys, subscribe to the channel, hit the like button, leave me a comment. All of those things will help YouTube to help me grow this channel. If you would like some additional information from me, go to my website, www.standardgrain.com. Check out my premium subscription service today, guys. I send my premium subscribers a ton of information direct from me every single business day. Morning email goes out about 5:30 a.m. Central. In that email, you'll see every overnight headline you need to be aware of. Charts, graphics, weather info. My daily subscriber-only videos are part of this deal. Yesterday, I had a mailbag video, and I do one of these like every week or two, depending on how many subscriber questions I have come in. But the topic yesterday was, what if China invades Taiwan? What are the grain market implications? There were a handful of other questions in here also. If you guys are interested in this sort of content, sign up today. $50 a month, cancel at any time. No other fee, no other obligation. Nobody will try to sell you anything else, I promise. We've got some more U.S. corn and soybean production estimates coming out ahead of the September 12th USDA report. Well-followed private group StoneX pegged the U.S. corn yield at 173.2, which is down from its previous estimate of 176, but way above that pro-farmer estimate of 168.1 that was out after the crop tour. StoneX has the total corn crop production at 14.168 billion. So when you compare the numbers here, say StoneX versus pro-farmer, StoneX is 409 million bushels larger than pro-farmer. USDA is 600 million bushels larger than pro-farmer. So I know that if you're a corn bull, if you're bullish the corn market, you're hanging your hat on that pro-farmer number, right? Well, now you've got a well-followed group out with a much larger estimate. They're more than 5 bushels per acre larger, 409 million bushels larger than pro-farmer. Drastic difference there. I mean, you're talking hundreds of millions of bushels, which would have drastic price implications depending on which way we go. USDA is going to provide their update on September 12th. We'll see more estimates from private groups. So I have no idea how big the crop is. I think the general consensus among traders is that USDA is too high. It's just by a question of how much, but that's not a guarantee. I mean, could USDA go flat to move their estimate higher? It's not outside the realm of possibility, but I think the general consensus is that, yeah, USDA is going to come down. It's just by a matter of how much. But I mean, huge variations between USDA and the private groups and even like StoneX versus pro-farmer. I mean, huge variations there. When it comes to soybeans, you're not seeing that variation at all. StoneX has the U.S. soybean yield at 51.8. USDA is at 51.9. Pro-farmer was also 51 and change following the tour. So not a ton of variation there. So the big variation is in corn. We don't know how big the crop is. We're going to start to learn more on September 12th from USDA, and then in the October report, we'll know more here over the next couple of months. But big time price implications depending on which way this thing goes, guys. We got some rains moving over, I'll say eastern Iowa into Wisconsin, and that system should work its way kind of more northeast through Wisconsin. I don't think it's going to get down into Illinois. You got some rain over parts of Minnesota here, and then a system over, say, northeast Oklahoma, southeast Kansas, this Missouri, Arkansas area with some rain. Over the next 7 days, again, rains kind of favoring central and eastern areas of the Corn Belt. The Mid-South and the Southeast and the Gulf Coast actually would be the wettest areas over the next 7 days. Say Ohio, Kentucky, Tennessee, down into the southeast Gulf Coast. The Dakotas mostly dry, Minnesota mostly dry, Nebraska mostly dry, maybe Kansas with some rain, maybe Oklahoma with some rain, kind of a mixed bag. When you look at the 6 to 10, drier in the northern areas, wetter in the southern areas, temperatures continue to trend above normal. I'm not seeing any frost threat anywhere, at least through like the third week of September, the way that it looks. So temperatures slated to trend above normal. U.S. exporters sold more soybeans. USDA reported a flash sale of 396,000 metric tons. That's about 15 million bushels to unknown destinations for delivery during the current marketing year, which just began yesterday. USDA does continue to report flash sales, although the weekly export sales system is still down, like I discussed yesterday. I believe they'll be back September 15th, and on September 15th, you're going to see kind of like a data dump. They're going to release backdated data for the weeks that they missed. I believe that's the way it's going to work. World food prices fell for a fifth consecutive month in August. The UN's World Food Price Index dropped again. It's now fallen 13.6% from the all-time high that was posted in March. It's still 7.9% above where it was a year ago. Wheat prices in particular have fallen sharply from the highs that were posted earlier this year, and that's a big contributor here. This thing tracks a basket of international food-grade commodities, but just about every commodity market, I mean, most of your agricultural commodities have fallen from the highs that we've seen earlier this year, so no surprise here. So the food shortage story, I mean, I still see those headlines floating around from time to time, but prices are coming down. We've got that situation in Russia with wheat. Russia's got a monster crop that they're having trouble exporting. I discussed that yesterday. So the food shortage story, I believe, at least for the moment, is kind of on its way out. The global bond market has entered bear market territory. A lot of traders track this Bloomberg Global Aggregate Total Return Index of government and investment grade bonds. It's fallen more than 20% from its peak from 2021. And this is something that we just don't see. There's an entire generation of people that includes myself that has never seen a drawdown in bonds like this. This is the biggest drawdown for this particular index since its inception in 1990, but this is something that's totally new to a lot of us. The bonds have been in a bull market for 40 years, and that bull market seems to be at risk right now. You've got tighter monetary policy, rate hikes all over the place. Powell's talking very hawkish at Jackson Hole last week. He didn't say it, but I think they're not so concerned about necessarily pushing us into a recession. They're much more concerned about containing inflation and maintaining or restoring price stability. One analyst quoted by Bloomberg said this: "I suspect that the secular bull market in bonds that started in the mid-1980s is ending. Yields aren't going to return to the historic lows seen both before and during the pandemic." So essentially saying, interest rates aren't going back to zero. And that's probably true to some extent. When do they peak, or where do they peak? Where do interest rates peak? That's going to be a function of inflation, I think, and that sort of deal. So when does inflation calm down? That's when the Fed will be able to ease with these rate hikes. The global bond market is actually larger in dollar terms than the stock market. It's not as easily understood. It's not as transparent. If you're an investor and you've got your typical 60-40 portfolio, 60-40 portfolio, you're doing very poorly here because the stock market's down sharply and the bond market's down sharply, which is just something that you really don't ever see. So interesting stuff here, and it's another bad sign for the economy, I believe. Cattle market was mixed yesterday. There was some cash trade, 140 to 142 in the South, which was steady, mostly maybe $1 lower versus last week. Feeder cattle were higher. In the outside markets, the U.S. dollar is lower. We've got the stock market just marginally lower. The S&P's down 5 points. The Dow's down 30. Bonds are flat. Gold's up $7. Crude oil is up $1.60 in the October WTI at 88.19 last trade. Now, remember, guys, the grain markets are closed on Monday for Labor Day. We will reopen Monday night at 7 p.m. Central following a normal close today. Have a great weekend. I will talk to you Tuesday.